Hi, previous video the paper got stuck, so I've now resolved it, so I'm hoping to get through 11, 12 and 13 on this video. So just sharing the screen now. Okay, so here we have task 11. Right, so 7 marks indeed, so 27% of the exam is these 3 tasks on capital gains tax. So Wendy made the following capital gains and losses during 1920 and 2021. It's told us the year, the annual exempt amount in that year, the gains and the losses. So we have to calculate Wendy's annual exempt amount not used in 2021 and the loss to carry forward. Okay, so in the year 1920, so I guess this is testing our knowledge that current year losses have to be subtracted straight away, whilst brought forward losses can be used as you wish. So in the year 1920, if I do 7,250 subtract 2,300, I get negative 13,050. Now, I've got no choice but to deduct those losses from those gains, and the fact that I don't use my annual exempt amount is just tough. So I have at this point a loss of 13,050 to carry forward indefinitely. So make a note of that, 13,050, the loss that's carrying forward from 1920. So then in the year 2021, if I do 25,610, subtract 15,300, I've got no choice but to deduct the full amount of the current year's losses. I get 10,310. Now, before I use any of the loss brought forward, I'm most sensible to use my annual exempt amount as far as possible. Now, I've only got 10,310 and I've got an annual exempt amount of 12,300. So 10,310, the difference between that and 12,300 that's available is 1,990. So I'm just wasting that annual exempt amount. That means that I haven't used any of the loss that I brought forward from the year 1920. So I made a note of that, which was 13,050. So I still have all of that loss available to carry forward further. Part B. The following information is available about 3 taxpayers who sold capital assets during 2021. These are the only assets that they sold, none of which relate to residential property. Right, so Alex sold to her husband, or maybe it's a he with a male husband, I don't know. So if it's a husband, it's an interspouse transfer. So therefore, there is no capital gains tax because it is exempt. So I don't even have to look at the figures. I know it's exempt. No gain, no tax. Donna has sold to her brother. So a brother is a connected person because it's not an aunt, an uncle or a cousin. So if it's a connected person, I know that I have to use the market value instead of the cost. So you can see what's happened here. There's been a bit of a very cheap sale made. So I have to use the market value. So my capital gain is going to be 19,000 proceeds, subtract 23. Oh, what am I talking about? Sorry. The market value is going to replace the proceeds, isn't it? Duh, sorry. Right, so start again, Laura. So I'm going to say, right, the 23,000 is effectively what I got. And then I'm going to subtract the cost of 7,500, which gives me a gain of 15,500. Now, I have to work out the capital gains tax payable, I first of all have to subtract my annual exempt amount. All right, so far I'm sitting on 15,500, which is the market value, subtract the cost. I'm now going to subtract 12,300, which is the annual exempt amount, which gives me 3,200 chargeable gain. The question is not asking me what the gain is, it's asking me what the capital gains tax payable is, which is why they've told me this other taxable income. So if other taxable income is 35,000, remember taxable income is after the personal allowance has been subtracted. So I'm at 35,000 out of 37.5 in my basic rate band. And I've got 3,200 to tax. So therefore, the first 2,500, so 35,000 up to 37,500, so the first 2,500 will be at the basic rate for capital gains tax, which is 10%. So I'm going to do 2,500 times 10%. And then remember, I've got a total of 3,200 to tax. So 3,200, take away the 2,500 I've already taxed, leaves me with 700 to tax at the higher rate. So I then need to do 700 multiplied by 20%. That's 140. Add that on to the 250, which was the 2,500 at 10%. Which gives us a total answer of £390. Tricky one. Right, so just to recap what I did. Use the market value, subtract the cost, subtract the annual exempt amount, gave me 3,200 that needs to be taxed. The first 2,500 are at the basic rate, which for capital gains tax is 10%. And the remaining 700 is at the higher rate, which for capital gains tax is 20%. If you can't remember that, click on capital gains tax and it tells you. It also tells you the annual exempt amount. Right, Bridget, selling to a friend. So a friend is not a connected person, so we use the actual proceeds. So let's do 26,000, subtract 9,500 is 16,500. Then subtract the annual exempt amount, 12,300, which gives me 4,200. So I can see even by adding 4,200 on here, I'm nowhere near the higher rate. So the 4,200 will be taxed at the basic rate, which for capital gains is 10%. 4,200 at 10% is 420. Part C, true or false? When a capital loss is made, the loss can be carried back up to 1 year or carried forward. Well, it can't be carried back, so false. Right, so that concludes the capital gains tax questions, and then we have 2 on inheritance tax. So as I've said before, tax 12 is usually fairly straightforward. It's kind of about, I don't know, usually about exemptions and that sort of thing, nothing too arduous. And then task 13 will be a shortish computational question in a grid, either on tax during life, tax on a potentially exempt transfer or CLT at the point of death, or tax on the death estate. Maybe, I think in this one it's a calculation of a nil rate band. So yes, there's a lot in inheritance tax, but remember it's 12 marks, whereas capital gains is 27. You're probably going to know enough from the basics to get sort of 3/4 of these marks in the bag, I would suggest. So let's see what you think. Complete the following sentences. Richard transferred the ownership of a boat into his wife's name in May 15. In December 2020, Richard died. The transfer of the boat Well, it's going to be exempt because it's his spouse. If it wasn't his spouse, less than 7 years have passed, so it would not have been exempt if it had been to somebody else. Next bit. Samantha received £10,000 from her grandfather on the occasion of her marriage. Right, so let's remind ourselves, marriage exemption, grandparent is allowed 2,500. So the maximum value of the transfer that may be liable to inheritance tax, take off that 2,500, would be 7,500. Just checking that's right, yep. And then Hugo transferred a valuable painting to a charity in April 15, to a charity. We know charities are exempt, political parties and all of that stuff. In fact, if we go to the inheritance tax, if we can't remember, does it tell us that? No, we have to remember that, unfortunately. Never mind, it's not too hard to remember. The transfer of the painting would be exempt. Where a person does not use all of their annual exempt amount, so that's the 3,000, the unused excess, now hopefully we've done enough of these for you to know, it can be carried forward, but it can only be used in the next tax year. So if you don't use it, then, you know, in questions, you only ever see a maximum of 6,000 being deducted, don't you? So it can only be carried forward for 1 year. And then identify whether these are true or false. Partnerships are treated as chargeable persons. A little bit of a detailed point, but it's only individuals, so that's going to be false. The 250 small gift exemption is per transferee, that's the person that's getting it, per tax year. Yes, true. Right, so hopefully you can see not too bad. Of course, you don't know what's coming in the real exam, but these are supposed to be representative. So then the final question, also on inheritance tax, but only worth 6 marks, a freestyle grid. So as I said, I think this one's on nil rate band, is it? Calculate the total nil rate band available for Paul's estate. Always worth seeing what the question is before you read the detail, I think. Enter whole pounds only. So Paul died on the 10th of December 2020, leaving an estate valued at 1,080,000. This included a residential property valued at 475,000. Right, so there's no mention of a mortgage. So we know that the residence nil rate band is 175,000. And we know that the normal nil rate band is 325,000. We know that the residence nil rate band only applies if the property is left to a descendant. So it's Paul's granddaughter is going to inherit. So a granddaughter is a descendant. It's either a child or a grandchild. Right, so it's looking good so far. The only lifetime gift that Paul made was a painting valued at £10,000 to his closest friend when his friend married. So thinking marriage exemptions from anyone else is 1,000 in June 2018. So a gift for a wedding, it was the only lifetime gift. So I'm thinking a wedding exemption or marriage exemption plus annual exempt amounts of 3,000 times 2, because of course we can carry forward the previous year. So 2 lots of 3,000 is 6, plus the marriage bit is 7,000. So that means that only 3,000 of that painting is chargeable to tax. The reason it's chargeable to tax is because it's a potentially exempt transfer, and it was done in 2018. And it's only 2020, so they haven't survived the gift by 7 years. So what did I say, 3,000 of that is going to eat into the nil rate band. So let's see what we're going to do. So we're going to say, let's put a pound sign in here, make it nice and tidy. With these grids, what I would recommend is start with a narrative, any workings in here, or potentially use it as, you know, end column. And then if you need to do any subtotal workings, maybe indent one, a bit like you do with a profit and loss account or statement of financial position. So how should we do this? Let's say pools nil rate band, so 325,000. Paul's wife died on the 19th of August 17. Her estate on death used 20% of the nil rate tax band. Paul's deceased wife's nil rate band remaining. Just put nil rate band, it won't let me put more space in. So how are we going to work that out? Well, if she used 20%, there's 80% left, so I would probably go like that. So 325% times 80, sorry, 325,000 times 80% is 260,000. Then we have got Paul's, we've got Paul's residence nil rate band, 175,000, and of course his deceased wife's residence nil rate band, which is another 175,000. And then we have got the chargeable transfers in last 7 years. So we've got this 10,000 minus 2 times 3,000. You could, I suppose, put annual exemption in there so that the examiner knows what it is, minus 1,000, which is the marriage exemption. So as we said, that's 3,000 that's eaten into the nil rate band. So if we then work out what all of that comes to, we get a final answer of 932,000. Okay, job done. The end.